It is Veterans Day, and President Obama, after returning from Fort Hood, and he obviously will be honoring veterans at the Tomb of the Unknown Soldier in Arlington, Virginia today, will then be making his first trip to Asia since taking office. This visit comes as China is in the midst of a bull market and economic growth, which, if you believe it, is truly stunning. 16.1% growth in industrial production, we found out today. Carlyle Group's David Rubenstein calling China the single most attractive place in the world to invest at this moment. Lots of ways to do that. The stock market may be the most volatile, but the Shanghai Composite is up 72% over the past year. Can the run roll on? And is China really a safe place to put money? We're going global with Jim Oberweis, portfolio manager of the Oberweis China Opportunities Fund. That fund has more than doubled so far this year. He just got back from China 3 weeks ago. Peter Navarro is author of The Coming China Wars and business professor at the University of California, Irvine. Good to have both of you with us.
Good to be here, Aaron.
Just a few days ago, I actually spoke to Ambassador John Huntsman, now our former Republican governor of Utah, now America's ambassador to China, and asked him the question about whether we could trust all these numbers, whether it's industrial production or whatever it might be, whether they're inflated. And I thought his answer was pretty honest. It was basically there may be some real issues there, but he does believe that the underlying growth story is a real one. Would you agree, Peter?
Absolutely. I mean, there's 16%. I mean, there's no point in lying about that. That's way off the chart. So the issue, of course, though, is whether there's a growing asset bubble within the country and whether the whole thing's going to collapse. I mean, let's face it, they did a much better job than the United States or Europe in getting their fiscal stimulus out early and more targeted, and that's why they're rolling.
And Jim, what is your point of view? I mean, look, I guess you raise a fair point. Peter does, 16.1%. Why lie? I mean, 12 would have seemed perfectly high to everybody else to begin with. So point is taken there. But what about this issue of a bubble? If you're a regular person sitting in this country, how in the world do you know where to put your money in China?
Yeah, well, I mean, I think there's a couple of things to think about. The first of all, is if you just walk around the street and you talk to people, people are very optimistic, much more optimistic than they are if you're walking around New York. So I think there's clearly a growth track. How do you find good companies? Well, I think it's very similar to how you find good companies here. You look for companies that have differentiated product sets that are able to grow even faster than the market overall and that have defensible competitive positions. That's really the key, I think, to find companies that are going to be able to grow even when the economy doesn't provide the tailwind that's providing right now.
And Aaron, for the investor who doesn't want to take the time to do that, I mean, there's two ways to play China. I mean, one is FXI, which is essentially an exchange-traded fund that's like the Dow here in the United States. I mean, that's a good way to play China if you're going to do it. It's near its 52-week high right now. The other thing, though, is I like to call it the trade of the decade. At some point, the Chinese yuan's got to decouple from the dollar and appreciate fairly dramatically. And there's an exchange-traded fund that Wisdom Tree runs called CYB that's basically a bet on that appreciation. I like that a lot as well. And then the other thing is South Korea. South Korea sells a lot of capital equipment into China. It's booming because of China. And the way to play that is exchange-traded fund EWY. So there's three ways you can go.
And Aaron, Peter, well, what is the danger to us of an asset bubble in China? Why should I be concerned?
Well, because we're in a global economy right now, Mark, and if China goes down, I mean, China's like the only real success story in the globe right now. In many ways, it's the locomotive pulling the rest of the globe. It used to be the United States. The thing, though, Mark, that I really is Obama goes to Beijing. The thing that really has to be dealt with is this fixed exchange rate. I mean, before the dollar started its dramatic decline, the only victim in the undervalued Chinese currency was the United States. But now, with the dollar down by 16% since March, dragging the yuan down with it, other countries around the world, whether it's Brazil and Colombia and Latin America or Europe, are getting hammered in their export sectors. That's the big threat to the global economy more than the asset bubble.
All right, Jim, we got some investing ideas from Peter there. some ETFs he likes. What about you?
Yeah, sure. I really would focus more on individual stocks. I think there's really a clear opportunity to differentiate by management teams. For example, I would look at a company called Asia Info. Asia Info is a leading provider of billing software in China. As 3G continues to gain hold in China and you continue to get higher cell phone penetration rates, companies are going to need more sophisticated billing software to meet the client demand. So Asia Info is a great way to play it. Another way to play the increasing consumer spending power would be in the hotel industry. We like Home Inns a lot. Home Inns operate 600 economy-based hotels. I think they'll grow at 30% next year, and they just reported great numbers. So Home Inns would be another great play.